required. There's essentially 20 trading days in a calendar month. Generally, there's about 2 of them that I don't like to trade on, no matter what. That's non-farm payroll and the day before non-farm payroll. FOMC, I'm not afraid of FOMC. I'll trade on FOMC. The Mondays that I do like to trade are this week. Why? Because if you look at the economic calendar down here on Friday, what does that say? Non-farm payroll. So I know that even though there's no employment data, no economic data, no news drivers with anything to speak of in terms of high impact or medium impact from Forex Factory's calendar, there are things that are occurring today, but generally this is kind of like a light day. But we're also in earnings season, so all these things are going to create a wild week of trading. So I want to ring this in right now. When do I avoid daily bias? When do I avoid not forcing a bias on this event right here? We have FOMC this week. We have rate announcement. We have non-farm payroll. Look at this calendar. This is a minefield. So I don't expect myself to go in on a week like this and say, okay, I need to know what the daily bias is on Monday. I need to know what the daily bias is on Tuesday. I need to know what the daily bias is on Wednesday. I need to know what the daily bias is on Thursday or Friday. I don't. I give myself permission to not have to worry about that. So what does that mean? What do I do? Well, you have the conclusion that you're either going to not trade or you're going to trade. If you're going to trade, how are you going to trade? You're going to trade without a bias. That means you're going to trade intraday volatility. I have to be very careful what I'm about to say because some of you take my audible clips and you either use them in the right context, and the people that don't like me take them out of context and they make them something that I didn't say. With experience, and when you can determine when everything is in your favor for the market to be slated, bullish or bearish, and have a sustained price run higher or lower, those are the best conditions to trade in. But they're not the only conditions to trade in. When I'm trading with a market environment that is without a daily bias, I am never trading with my highest leverage. I'm not trading with 4.5% per trade in terms of risk. I never do that. I will never open myself up to that. So what is my risk per trade when I'm in a market environment where I don't have a way of discerning with confidence the assurity that I've already described how I have the assurity and confidence to do it on certain days? When all those factors are equal, then I will risk the maximum. If I miss the initial move, whether it be stopped out and I have to re-enter, or I just get to my charts late because, hey, I have a family. Sometimes, nature calls and I have to relieve myself and I just can't be in front of the charts. I'm a real person. I'm not AI. I'm a real person. I may be tied up, with something that my family requires me to do. And then I get to the chart and I miss the real ideal entry point. Then I'm going to risk about 2.5% maximum. But if all the things that I just described, if I miss that, and I had to just use a fair value gap to get involved in a move that's already maybe 40% on its way, and I have 60% of the unrealized range still left to be delivered to the price, then I'll trade with 1.5% risk max. Now, I just covered a very vast array of questions that I get a lot. There's nothing I can do audibly or write into a book that's going to make that any more plainer or straight to the point. It's so plain and straight to the point that it's boring. It's boring the socks off you. But that's the stuff that makes you or breaks you. See, you're going in with, I need to know the days that ICT wants to trade and the days that he wants to know when he wants to be a buyer or seller and where he knows the high and the low of the day. There's a lot of things that are required for that. And that's not an everyday instance. An everyday instance is unrealistic, and you can't obtain that. No one's going to be able to obtain that. Why? How can I say that with a surety? Because manipulation is always a factor. You don't know how many times they're going to pass through an old high before they drop it. You don't know that. You don't have the experience to see that yet.